Alex, Jan. Okay, I just hit that button so it'll allow me to view the stream. I haven't done that. Like Jan, let me just turn this.
You found it?
Yeah. Somewhat delayed.
Yeah, it's always
Yeah.
about 20 seconds behind.
Okay. All right. So welcome everyone. I'll just give everybody a second and then I'll share my screen. We can get started. So about 67 participants from all over the world, Knoxville, Tennessee. So welcome everyone. Philip says today was a big move on Beyond. Yep, I really scored on that today. I've been talking about that all week, and then it gapped lower, kind of closed higher. So I actually covered my position. I'll talk about it. I'll give this another minute, just allow everyone. All right, so let me share my screen. We can get started. So it says host has disabled the participant share screening. So I'm not quite sure. Yeah. Do I have to need to log back in?
You should be able to go ahead.
Okay, now I can. All right, so welcome to the fourth and last of my live trade execution webinar series, subtitled How to Capitalize on Monster Moves in the Markets. My name, again, is Mark Shawson, the Pattern Trader, so welcome. Thank you if you've joined me all 4 days. If you're just tuning in, I look at the markets exclusively on a price pattern, price action standpoint. So I don't look at the news. I look at how the news, how the market reacts to news. I don't look at the news itself. I don't trade off the news. Earlier in this week or late last week, there was some news on Beyond Meat that was very bullish. They announced a strategic relationship with McDonald's, a 3-year thing. The stock went to about 116, and I was selling into that. And I was telling all my members on our morning session to, that it's a BS move to sell short at 116. And today Beyond Meat went to 104, despite that bullish news. So I trade only on price action. As a member or an attendee, you should have gotten a packet from us, with our strategy, our scientific trading strategy. If you didn't, you can get that from our support team. So today, as you can see, I was heavily short Beyond Meat. I had 13,305 shares short in this account and made $67,800. And then I was short 16,000 shares, so almost 30,000 shares, and I was up 60. So I made about $130,000 just today in today's trading action. I did close these positions out. I'll talk about that in a moment. And then also in the FX market, I made a few shekels. I had a pending order in gold over the weekend. So this was my email that I send out over the weekend, and it had two major themes. So the email was called Beyond Help, because I was talking about that. I said BYND has formed a series of mouth-watering long-term bear price patterns. I would not be surprised to see the price of this stock cut in half. So I have been recommending BYND from about the 120 price level. Today it hit 104. And then I was also talking about gold and silver. And I said the path of least resistance appears lower, even though most people are bullish gold. I have been shorting gold and making a lot of money, as you can see. So this was my sell short. So to me, that, I've been talking about the last couple of days. I have a 4-step trading methodology. Each step gets you closer and closer to the bullseye of a high value trading opportunity. So I had this pending order in the market since Sunday, and today's Thursday. So this pending order has just been sitting there for 4 days. We had a retail sales number today, came out, hit my pending order, and I'm up a neat $71,000 so far. I got in at 1781. It's at 1754. And all I did was stick this in on Sunday night and let it work for me. If it never got triggered, then I would never have been put in, and I go on with my day and what have you. But I was looking at the gold pattern. I'll look at this a little bit now. Gold has been trading in an ascending, broadening price pattern. I said penetration below the low of the recent weekly key reversal bar could be followed by a move lower to around the 725 area or lower. Now, this was my email on Sunday. So I said this, well, I guess you can't see the date. I took out the date, but this was my Sunday email 4 days ago. So I was saying this, and you can see that's where the bar was, and then we crashed below it today. And we're now 1750 or so. And you can see I've got a take profit at 1727, but if it keeps moving toward that take profit, I'm just going to keep moving that take profit. I'm not going to stop it from making me more money if I see that there's more on the table. I also suggested to our members to get short euro yen. I'm also short the euro yen at 129.51. And here was the third sell short suggestion. And this was all on Sunday. Beyond Meat closed, I don't know, around 115. Today it went to 104. And you can see that I've been heavily short, 120, 119. I talked about all of these, bearish price patterns. And I said, this trade looks like a slam dunk. So today, I made $130,000 on that trade. So here was, I was long Netflix, short Beyond Meat, long Netflix, long Tesla, and you can see all of the open profits that our members would have had from these trades. So now I'll go to the live markets, kind of discuss about the few trades that I've been talking about over. Oh, and I also suggested to our members to get long pound New Zealand a few days ago, 194.87. We're a little bit higher today. I think this thing goes a lot higher. So you can see here's my short euro yen trade at 129.51 in a small $10,000 profit. And I added to that position just a few days ago. So I'm sitting in some nice profits on the FX side. So this is the pound New Zealand. I think it's going to go a lot higher. So the one trade that I have been talking about all week that I'll just kind of go over really quickly is BYND. To me, this has been building and building and building. And so I look to find something that's got a huge pattern. And then I build a position, like you said, you saw, I had 30,000 shares, and then it went in my favor. I made 130 grand. And this, presents a bit of a conflict to me because on one hand, the whole chart pattern is very weak and very bearish. This is a daily chart pattern. Each one of these price bars represents 1 day in time. So you can see here was a double top, here was a double top. Even though these tops are not in the same thing, they still look like an M top. And that to me is a bear price pattern, signals that the market is going to go lower. And that's exactly what transpired. And then more recently, we had another huge bear price pattern in the form of this head and shoulders. And what made this even more bearish was that the right shoulder, the right shoulder was sitting below the left shoulder, which created this down-sloping neckline. Neckline is simply a line drawn through the pattern. And this implied that not only was this bearish, but it was going to go down very quickly. And that's exactly what has transpired. Now you can see we're at a bit of a support area. Whenever the market hits an area that it jumps off, it hits a bit of support. And what kind of made me a little bit jumpy. And so I jumped out of my positions today, and I might regret it because this is going down long term. But whenever market makes a new low and then closes on the high, I kind of, so this is, I've got mixed feelings. It's kind of like, watching your mother-in-law go off a cliff in your brand new Ferrari, so had mixed feelings about, whether I should get out of some or all of it. I got out of all my position at a nice price. I booked a nice profit today. And, if we start going down again, I'll get short. This thing still looks very bearish, but it closed very funky, closed right on the high of the day. And so I just got out of the way, and I'll take a look again about another re-entry on the weekly. Nothing's really changed. This thing is still very, very bearish. But, we're at these, support areas, and, all kinds of stuff can happen. They play all kinds of games. And so I may regret getting out of my position. I really wanted to hold this long term, but I just didn't like the way it closed today. So you can see here is this huge double top head and shoulders. And a head and shoulders is just what it sounds like. It looks like a man or woman's shoulder, head, shoulder. So it looks like a head and shoulders price pattern. And so this is exactly what you have here. Here's the shoulder, there's the head, here's the right shoulder, and now it's crossed through this neckline, this 113. Once it punctured this neckline, I said over the weekend that it's basically over. And so now it just has to navigate this kind of this primary support level around the 100. And you can see it got pretty close here today. So whenever you kind of retest a major area, sometimes the market just gets jumpy. So while it looks, like it closed very well on the daily, you can see on the weekly chart, it's just really trading in the middle and doesn't look like anything other than this thing is still poised to fall. So I'm going to kind of monitor this. I'm going to look for another way to reload. But I just stepped aside this for now and jumped into something that, looks like I always want to be in trades that I'm not fighting the trade. I want to go with the momentum of the trade. So by closing on the high today, I don't know, maybe it'll just open $5 lower tomorrow and I'll be really upset. This thing is still going to go lower. I talked about gold. So, I look at charts on, whether it be FX, gold, it doesn't matter. I look at everything the same way, direction, pattern, and price action. So, whoops. Just want to get this little distraction out of here. So, gold has been kind of trading in this funky, sideways thing, back and forth. But, if you step back and look at the longer pattern, gold's actually been trading within the boundaries of this funky trading pattern. You don't see this too often. Not too many people know it. It's called an ascending, broadening price pattern because throughout the pattern, prices are going higher. It starts out life in the pattern very narrow and then widens or broadens out at the top. So once I realized about halfway through this thing, right around here, and I saw these key reversals right here, I told our members that we were going to go back and test the lower support area of this ascending, broadening price pattern. And I said I was looking for, something between 1650 and 1700, and we hit exactly 1787. And it was somewhere in all of this stuff where, I don't know where these, let me just, I'll show you this gold trade. There. So yeah, this is right in the middle of this pattern. I sent out email to our members to sell it at 1867. You can see right in the middle, when it was just so. Now that we see it fully formed, it's one thing, but I started to realize what was going on. I started calling it an ascending, broadening price pattern right in the middle of it. And I said, for the past few months, gold has been forming an ascending, broadening bear price pattern. Last week's massive key reversal is pointing in the direction gold is going to go lower. So at that point, gold is trading around 1900. And I was saying my target objective is 1700. And gold actually ended up going to 1687 or 1677. Here was an additional trade that I mentioned to sell short it. So I ended up getting short 2 positions of gold, one at 1841, one at 1795. I got out at 1687, right at the lower support level, and made 600K on that trade. So to my mind, gold is still trading within this ascending, broadening price pattern, and looks like it's really now going to hit this lower end around 1700. So I said that, right up here. So the way I approached this trade was, sent out an email over the weekend, told our members to put a sell stop right there at 1781. And then during all of this week, gold opened and went higher. And if it kept going higher, then my pending order would never have been triggered, and no harm, no foul. But what happened, you can see it came down, hit me, and then I was immediately put into a trade. I didn't even know I was put in this thing. I just woke up this morning, or after the retail sales, I just saw this thing exploded. So I don't monitor. I just put my pending order in, then let the market do all the work for me. So now I'm in the trade. I'll just continue to monitor it. I have a price target around 1727. I'm going to actually expand that tonight. I'm going to drop it to 1700. I don't want to get in the way of this making me more profit. If it's going to drop another $50 tomorrow, then I don't want to stop that. So I do think that, we're looking at retesting this thing. The thing is, this is an inherently very bearish price pattern. And what this tells me is that if this breaks through here, my profit, my take profit is not here. It's not there. It's there. So what the ascending broadening tells us is that when this thing breaks, it goes right back to the beginning of this pattern. And as hard as that sounds to imagine, in this, everybody's worried about inflation and talking about monetary stimulus and what have you. But, gold is looking pretty bearish, but it could hit this thing and then do that. So I always kind of draw my structure, and then I watch to see how prices behave. So in the meantime, if I could take, $80 out of this thing and then figure out where it wants to go, I'll do that. But right now, on balance, this looks pretty bearish to me. I'm short. Our members are short. If you're on our gold list or our elite list or our accelerator list, you would have got this over the weekend. So, to my mind, these were the bearish guys. I look at price action. I look at price patterns and price action. And right here, you had what I call a key reversal, where you made a new high, you close on the low, made a new high, close on the low. And these are weekly bars. So the bigger the bar, the bigger the time frame, the more important that. So these actually point in the direction it wants to go. And so I look at a combination of key reversals and inside bars. So you can see here right at the top was an inside bar. I actually sent out an email to sell short there and took out a whole bunch of money on the fall out of that. And then last week we had kind of this reversal, made a new high, close on the low. So I basically said, just sneak a sell stop under here, see what happens. And like I said, the market went higher, then triggered me into a nice trade and making 70 grand right now on, an effortless thing, just by putting a pending order in the market and let the market work for me. But you can see I'm not trying to take $1 here and $1 there. I've got $30 in gold right now, and I'm looking for $30 or $50 more. So I'm not looking to take out the small trades in the market. I'm looking to take out the bigger moves. So that's kind of gold. We talked about euro yen. Also talked about this week. I'm short euro yen, and it's kind of bouncing around. Euro yen's a little bit tougher. We'll see where that goes. I don't know. I have a really firm confidence one way or another. I just found, an area where I just thought I had a good risk reward, and then I kind of see how the market. So right now it looks like we're forming a head and shoulders, we'll have to see. I mean, it could still grab a foothold and go that way. So I just saw, this was an inside bar over the weekend. I told our members, let's get short of 129.51. And so my risk is going to be very small. It's going to be to the high of that bar. So that's, going to be my risk. And, if this falls, this could be my reward. So I'm going to keep monitoring euro yen. It's not something that I'm in love with right now. But that's what's going on the FX side. The other thing was the pound New Zealand. Told our members to get long a couple of days ago rather. This is a very difficult trade. It's just made life very hard. But to my mind, the bigger the patterns, the big patterns. I'm trying to. I don't know what's happening here. I'm trying to. Actually, I'm clicking the wrong bar, I think. I'm trying to get a bigger time frame. Here we go. The more history you have to evaluate something, the more you know. I always say, you need to know the cards you're holding. So if you're just looking at things in this time frame, you could flip a coin. But that's why, to me, the history of this tells me that this is in a stealth uptrend. Stealth, because it's 3 steps forward and 2 back. But since 2016, when I called the bottom here at 165, we're now at 195. So this thing has gone higher, and I believe will continue to go higher. Now, why did I call the bottom? Because right here was literally a double bottom, where the market went to one low, bounced off the low, put in a new low, and now we have a W, or a double bottom. And with the word bottom in it, it implies what? That the market's just going to go higher over time. And I don't think that this is going to be an exaggeration. One day, I think you will see it up there. And in addition to the double bottom, when it broke out, it retraced, put on this rounding bottom, and both was conjoined by this neckline around the 180 level. So what became old resistance now became new support. And you can see it double bottomed at 180 a few years ago. Then it double bottomed in this time frame. And I do believe that these bottoms project that this will go higher. So now this is a weekly bar. This bar will close tomorrow. We'll see if it still stays a relatively narrow bar or jumps out of here. But I do believe that this was a slight reversal, made a new low last week, kind of closed on the high. And so I do believe that we'll be making our way back up. So sent out an email a couple of days ago to our members to get long the pound versus New Zealand dollar. Sorry, I'm just trying to so this is the pound versus New Zealand dollar. It's been kind of a crazy pair, a carnival ride to trade. To me, that's why I haven't really been trading currencies a lot. They've been kind of stuck in this trading range, but I do believe that this is a very fertile area. So, what I try and do is I try and hone in on what I call a governing pattern, a pattern that's going to govern or dictate how prices are going to go going forward. Now, nothing goes in a straight line, and you can see that this has been a difficult one. But to me, if you keep your eye on the ball, this is the governing price pattern, and all of this is just distraction. So, once I feel like I understand what the market's telling me, that this thing is put in a bottom, that it wants to go higher, then I just look for opportunities. And to me, if the market wants to go higher and then it comes off like this, I view this as a huge opportunity. So I'm going to start loading up. I'm going to actually add to my trade tonight. So you can see that this thing is starting to bottom. It just can't go lower anymore. It's like pushing on a string. And then today we've got a very nice looking key reversal. Made a new low earlier in the day, try to go lower by the end of the day. The buyers were in control. And this is kind of pointing in the direction that it wants to go. So I do think that you can get long pound versus New Zealand dollar. And you can see whether it's euro yen, pound New Zealand, gold, Tesla, Beyond Meat. I look at everything from the price vantage point of the vantage point of price. I don't look at the news. I don't know anything that's going on with the euro versus the yen or the pound versus New Zealand dollar. I don't look at monetary policy. I don't look at anything. And you can see this is also what we call a clean or a naked chart, where there's just time and price. There is no, volume. There are no Bollinger Bands. There's no, MACD. There's not any exponential advisors or moving averages. It's just price and time. I just look for direction. So I said, I open this chart and I say, well, what is this chart telling me? And this one's hard because it's just all over the place. But basically, the direction is higher. It is higher than it started in December at 185. It's now 195. And then, I say to myself, is there a pattern that's directing, traffic? Is it telling me where it's going? And so to me, this is the governing price pattern. And then once I kind of figure out, okay, direction pattern, then I wait for a bar or series of bars that tells me how to get in sync with this upward move and where my risk is. And so when we see a key reversal here, basically made a new low, close on the high. So I would put a buy stop above today's high. I would put a sell stop below today's low. This is my risk, and literally that's my reward. And I showed you how to use a risk calculator yesterday. It doesn't matter that there's 100 pips risk on this trade. You can take a 1% risk or 2% risk, figure out your lot size, and I don't care what account size you have, $500, $50,000, $500,000. It doesn't matter. People always say, well, I can't trade these bigger moves because I have a small account. Well, that's bollocks. A 1% risk on a $500 account is the same as a 1% risk on a $50,000 account is the same as a 1% risk on a $500,000 account. It's 1%. So all you have to do is figure out your lot size to take advantage. So I think this thing will move 500 or 800 pips. And it doesn't matter if you've got a $300 account or a $30,000 account, you can get positioned and take advantage of it. But what most people are doing are trading for 7 pips or 15 pips, trading a bigger lot size and getting cut up and wondering why they never make money in the market. To my mind, you cannot make money unless you have bigger outcomes. So I think that this is going to go for 2, 3, 5, 800 pip rump. And that's what I'm looking for. And so I'll sit in this trade for 3 weeks or 3 months, to get that outcome. But it's much better than cutting yourself up every day looking for the next 7 pips based on a 15-minute, moving average crossover. So that's basically, I'll kind of cover what, I'm looking at tomorrow. I actually bought some SNOW, SNOW on the close based on a favorable close, usually, waiting, during the day, trying maybe, but this is a price chart of SNOW, and I think it's coiling and will unleash to the upside. So I bought SNOW on the close. And again, doesn't matter what the instrument is, I, kind of look at everything from a, price pattern standpoint. So the first thing I say to myself, what is the direction of this thing? So for the last 6 months, we've been heading higher. Is there a pattern that's directing traffic? Yes, there is. You have this upside down or inverted head and shoulders. So it just, instead of a traditional head and shoulders, it looks like this, an upside down head and shoulders. And basically, when you cross through this neckline and you broke out, retested that neckline, and when you have a successful retest, it confirms that this thing is good to go. So now we understand what the direction is. Now I kind of just look for, certain bars that tell me where to get in the trade and what my risk is. So now you have a combination here of a key reversal. You made a new low, close on the high, and an inside or narrow range bar. So you can see today, literally, the range of that day sits within the range of yesterday. So you have this coiling. So to me, I just look at these narrow range bars as energy, storing of energy. And now I try and surmise, where the energy is going to uncork. So I kind of, always use the metaphor of like a beach ball. Picture if you put your hand on top of a beach ball and put it further and further down the water, and then, you let your hand off, what's going to happen? The ball just explodes. And so that's how I look at this coil, this inside day bar coil. So you've had kind of all of these things. You've had a key reversal here, a key reversal. So these guys are pointing in the direction it wants to go. And then yesterday, you had another key reversal, and then you had an inside bar. So this thing is coiling, and it's right at this, major area. So it's either going to get kicked back here, or it's going to, go for a run. And so I just bought this thing right on the close. And what I like about these narrow ranges is they kind of tell me my risk is very small. So I would risk to just a little bit, under a very small risk for maybe a very big upside. And that's what I'm always looking for, risk versus reward. So Philip, I will cover Tesla. Just give me one moment. So this is Snow. And, again, what I'm trying to do is communicate this methodology where everything is looked at, based on price. I have no idea what the earnings of this company are. I don't even know what this, I do know what this company does, but it doesn't really matter. I don't have to. In fact, the less you know, the more objectives you will be. So Brigitte says, I only have an account to trade stocks and options and futures. I don't have any Forex account. Will I be able to use your services, and how often do we get alerts? I can't short a stock due to cash account. Would you also provide puts rec? So I basically put out recommendations on stocks, futures, stocks and Forex and gold, Brigitte. So, it's very often, that most of my emails, contain a stock recommendation. Mohammed says, how do we know the patterns are valid? The market confirms them. So if you see, what looks like a pattern, then you want the market to confirm. So if that is a bullish price pattern, which it implies, an inverted head and shoulders is a bottom. So, it means that the market leading into this thing was a down market. This thing started putting on a reversal pattern, which implies that it should go that way. So now once a pattern implies something, then to my mind, I'm looking for the market to, confirm it. But if the market starts, crapping out here, and now we start doing this, then, all of a sudden, all these flashing warning signals are going off. And, then that pattern is not working. So patterns work, not really on a textbook. You have to look at the market will confirm the pattern. Now, this is a confusing chart because when this first came out, I was really shorting this. I made a lot of money shorting Snow. You can see it came out, here, and then it went up, and then very quickly made a double top, kind of an asymmetric double top. But right here, I surmised this was a top. So then when I saw this key reversal, this head and shoulders, I was actually shorting in here, made a lot of money on the downside. And then, kind of thought, this is a very new thing with very limited history. And, for most of this history, it was in a bear market. But then it kind of put on this little double bottom here. And I still wasn't sure what this thing was. And so this is where it kind of becomes a bit tricky is, what I say to myself, what is the governing pattern? What is the pattern that is going to govern or dictate the next move, the next major move or the next minor move or what have you? And so you kind of have a conflict where you have a, big governing pattern here that governed and directed traffic there. But then sometimes these patterns do their job. This did its job. It was a nice double top. It indicated prices were going lower. and prices fell from 300 to 180 from that neckline. So it did its job. And now you can see, things started doing something else. And now another pattern formed. Now, never sure if, what you're seeing here is correct. And so sometimes you can get a fake out here. And now if you start going back down, now this, inverted head and shoulders, is not going to be operable. But what happened was you can see that, contained, then we had another quick retest of this neckline. But, as we retested, we firmed up again. So all this action is telling me that, this inverted head and shoulders now, seems valid. And certainly once we made a new high. So, if you break out of here and then you retest it and then you break out and make a new high, typically that validates that this new pattern is in force and effect. And this had one more flushed out the weak hands, retested this neckline, and certainly once it kind of came above here, now this thing is real. So what happens is that one chart becomes a busted pattern. So the implications of this chart now are becoming increasingly busted. You can see that prices are, starting to rise above where this indicator was, a bear pattern. And now we've got a new pattern and a new sheriff in town. So it's a very involved answer, but that's the best way I can answer, is that once you see a pattern form, then the market needs to confirm what you're looking at. Sometimes you get all kinds of looks and you get false patterns, where, this kind of looks like a double bottom and you get long, but you can see that this thing never really confirmed. It never really got above the neckline. So if you think this is a double bottom, it never actually confirmed it. So, it was forced to make a new low, and now this then became a new thing. So that is kind of, I think, the skill that I bring to the table is that, I kind of know where the opportunities are, and I like to believe I know where the traps are too. So what I usually say to myself, if you have a series of bear patterns, where you had a double top here, and then you had a head and shoulders here, market just doesn't form two bear patterns and then form like one bull pattern right underneath it. So I kind of surmised that, we still needed to go lower, that this was not a, double bottom, even though it looked like it in this time frame. And so here you can see this double top here with these two key reversals, and this rounding top indicated that we were going to go lower again. But now, we're in this coil. We're in this key reversal, inside bar, right at this inflection point. So now there's a lot of white space for this thing to go back into. So I bought, I bought right on the close here. So I'll know tomorrow whether I'm right or wrong. So Emarisa says, how do you specifically choose a price to enter a trade? So like I said, I have a 4-step process. The first step I look at is I say to myself, what is the direction or trend? So that's step number 1. Then is there a pattern that is governing or dictating the future market direction? And here is your inverted head and shoulders. So there is the second part of the strategy. The third part is, okay, once I kind of figure out, okay, what direction, so you need to figure out, okay, which direction do I want to be faced in? And I'm talking for a bigger move. I'm not talking about for the next 15 minutes. I'm looking to take a piece of the market, $25, $50, $75, $300, a big piece out of the middle of a market. And so once you figure out what is the trend, what is the pattern, now you figure out, okay, how do I get on board this thing? Where, to your question is, how do I get in this thing? And, how do I assign my risk? So basically I use two forms of, what I call my insurance day bars. So the insurance day bar to me comes in the form of two things. One is a key reversal, where market makes a new low and closes closer to the high. So you can see this sold off, exposed all the weak hands. And by the end of the day or the week, whatever, the buyers were in control. Now, this could also, this is, something that you want to look for in a market that you want to buy. So here are a series of key reversals that start to show you that this thing was pointing higher. Made a new low, close on the high. 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 So those are key reversals. And after every reversal, if you put a buy stop right above there, it made a new high every single time. So you can use these reversals to, get in sync and get long with the market. Now, key reversal also, applies on the downside. If you're looking to get short, like here, once you understood that this was a double top, made a new high, close on the low, made a new high, close on the low. Here's another double top and pointed in the direction it wants it to go. So I use that as an entry or a combination. You don't need both, but if you get both, and today we have both, you have, what I call this inside day bar or narrow range bar. You can see the trading range from high to low of this day sits within the trading range of that day. And I don't really care where this inside day bar closes. It can, even close on the low. I'll still basically layer it by putting my entry order with a buy stop above the high. So to your question is, how do you get in? Here is your key reversal, your inside day bar. So basically what I would do is I would just put a buy stop above today's high. So today's high in snow was 325.10. And we closed at 323.50. So basically I would put, a buy stop at 325.25, 325.50, and let the market run into me. The market sells off, no harm, no foul. You don't get filled, and that's fine. So basically, I put my entry order here. I put my risk, somewhere under, today's low. So you have a very relatively small amount of risk for what could be a big upside. So this is the fourth step of the plan. So once I see the direction, the pattern, this is the third step. Then I look for what I call my insurance day bar, either key reversal or inside day bar. And then once I kind of see that, then I layer it with, my execution strategy, which basically says, put a buy stop above a market you want to buy or a sell stop under a market you want to sell. Basically a little bit under the high of this day or the low of that day, and let the market put you in. So that is my four-step layered approach to get you closer and closer to the bullseye of a big move. And all I'm really trying to do is take a piece out of the middle of big moves. So Emery says, now I get it. Thank you very much. You're welcome. So that is basically, how I look at the markets. Hopefully over the last 4 days, you've had a chance to digest it. Give you a chance to buy my book, which was Pay What You Want. And so if you would, let me just put this to, get, a foothold on some of our services. This is something that I would recommend to you. So this is a customized plan, complete with a financial success table that'll show you exactly how to personally grow your account to $200,000. So people who bitch and moan about why they have a small account shouldn't complain, because this is a concrete plan to get you to $200,000. Also, with this, you get a one-on-one call with one of our team members, Jonathan. to discuss where exactly you are in your trading maturity and discuss this plan in detail. And then if you want to go a step further, talk about our elite plan, which is my daily email elite, alert services, which would have put you into a gold trade and the euro yen trade and the beyond trade and a million other trades that have just been unbelievably successful over the last couple of weeks and months. I mean, this year has just been an incredible year. Then you can talk to another of our team members, Zach, and he'll discuss a program to suit your style. So we basically have something for everybody, no matter where you are, no matter what you want. If you like this approach, you think that this can make a difference, then check this out. So I think I put this in. Let me also put it in the YouTube. So there is a customized strategy to grow your account to $200,000. And then if you want, I also will, invite you to join the elite program when you are ready. So with that said, I'll spend the next 10 minutes taking a few questions about the methodology. So, everyone's asking me to examine 1 million charts. That's what I do in my Friday session. So tomorrow I have something called the Underground Trader session. And that's what I do. I analyze all the FX charts, the gold charts, the stock charts, and then I open it up to questions. It's usually an hour and a half, 2 hours. And, that's where I look at all of the charts. So if you, are interested in me looking at charts today, I'm not going to do it. I basically wanted to give you an insight into my trading approach. This is really it. 1, 2, 3, 4. And this, puts you in sync with the market. And you don't have to think about it. You don't have to spend your spend 3 hours in front of the computer at midnight till your eyes are burning out, trying to figure out where this thing's going. You get a million different head fakes. I put in a pending order in gold on Sunday night and it hit Thursday morning. So 4 days, nothing was happening. And then all of a sudden I'm into, a nice trade where I'm up 71 grand. So I just had that pending order just sitting there and away we go. So Damien says, can I get the link for the Underground Traders for Friday? So Damien, I don't really know where we offer these things. I'm just the front guy here. Just give a mention to our support team and they'll just tell them you're interested in signing up and they'll help you out. So just email our support team with anything that you're interested in, any questions, and they'll get back to you on a timely basis. But I thank you for inquiring, Damien, and hopefully I'll be able to see you on the Underground Trader. So that's every Friday at 11 a.m. Eastern Standard Time. And I usually go in, I spend about an hour going through the markets very thoroughly, going through the dollar, all of the dollar pairs, all of the euro pairs, going through things in detail, going through stocks, and then opening it up to any question you want. So that's where, so John says, thank you for your time on this week's series. You're simply the best. So John, really appreciate that. Philip says, is it free? The Underground Trading Series is not free. No, I've given you 4 days of my time for free. There's a limit. So Brigitte says, would us as members become independent or do we piggyback your trade? So the whole thing is to get you to be able to be independent, to liberate yourself from looking at the news, from counting on people in forums that don't know what they're talking about. Even Wall Street analysts that are trying to mislead you to sell you their stock. So the whole point here, Brigitte, is to allow you to become an independently successful trader. You don't have to have a minimum account size. People always get intimidated that in order to get involved in this, you need a big account size. Like I said, if you have a $2,000 account size, a 1% risk on $2,000 is the same as a 1% risk on 20,000. It's the same as a 1% risk as 200,000. It's 1%. So wherever you are, on your journey, there's no you can still take this trade with a $2,000 account. Obviously, you have to have a lot size that's commensurate with a 1% risk, so you're just trading a smaller position size. But in everything else is the same. Bridget says, I trade only options, no Forex to go. Would you be able to do it with my small options account? So I'm very active trading options. So options obviously move based on the underlying. So if I have a great feeling about where a market's going to go, I will trade options. I mean, here are, I've made 7 figures on options trades this year. Where is this thing? So here was in May. I saw a move in Beyond Meat, and I thought it was a trap, a bear trap. And I said, if a bear trap has been sprung, prices will rocket higher very quickly. So I had a feeling that prices were going to move in the opposite direction very quickly. So I started buying both the stock and the option. So you can see I started buying the stock at 121, and in this particular day it was at 139.5, and I was up 83 grand on 5,000 shares, and I bought 277 calls of the 125 calls at about $1.50, and these things actually went to $23. You can see in this case it was trading at 19, and I made over 7 figures on that trade. But you can see these are my options trades. I bought the 125 and 126 calls in Beyond Meat back in November. Late May, I bought them at about $1.50, and they went to $23. So I'm very active. But it's all based on my evaluation of what's going on the underlying instrument. I don't look at the theta and the gamma and the whole thing of options. Options are going to move if the underlying is going to move. So if I have a good feeling that the underlying instrument is going to move, I will trade it. So I trade everything. I trade indexes. I'll trade, everything. So, in this actually on the underground trading session on this Friday, I went through the NASDAQ that day, and I go, there's not 1, there's not 2, there's not 3. There was 4 bear price patterns in the NASDAQ. So that day, when I got off the underground trading session at about 1 o'clock, I said, this thing's going lower. And I got very aggressive. And at that point, the QQQs were trading at 334. And so I bought the out of the money puts, the 320, which meant that, the market would have had to have like a 5% move for me to make money. But based on all of the patterns I saw, I started aggressively buying in 2 accounts. So I bought 350 of the 320 puts. And so each put is based on 100 shares. So you have to multiply this by 100. So this was actually a $35,000 investment that expired 1 week later. So I bought them on the 19th, and they expired the following Friday. So if these expired worthless, I would have kissed $35,000 goodbye. But I ended up making about 10 times my money. So you can see I bought them at around $1, 91 cents and $1. And I got out of them at 585, 575, 631, and 810. So I made 800% on some of those trades. And I ran 35 grand to 195,000. And I did this in 2 accounts. So I made about 400 grand. And then the next week I did the same thing, and I made about 7 figures in the time that that rolled. So I analyze indexes, stocks, commodities. It's all the same to me. A senator says, what is the name of the book? So let me post the book here. Sorry, that was the wrong one. So this book basically explains my 4-step layered trading strategy. Here is the link. Put it in YouTube. And So this is the great thing is this is a pay what you want. So you decide you want to pay $1, $5, $10, $20, whatever you think the value of this information is going to bring to you, you decide. And then I will take any amount that you decide to donate and double it and send it to the American Childhood Cancer Organization. So in the last year, I've sent probably close to $35,000 from all of our book sales. So not only do I not make any money, but I end up losing money. I double the amount and send that into my favorite charity. So, I like to give back. This is the way I give back. But you also know that by buying this book, your money's going to go to a very worthwhile cause. So basically, you just hit that link and you choose your price and away you go. It's raining here and I can see that I might have a blackout. So if I cut out, it's because we have an electrical storm going on here. Someone says, why can't we pay by PayPal? We have it structured. Again, I don't have anything to do with this. We have it structured through Stripe. That gives you complete confidentiality. And I'm sorry, son, but that's how we're set up. Accentra says, how long will it take to achieve your 200K plan? So call our team, Accentra. It depends where you are. It's based on a cumulative thing on how much you compound, by adding. And so everybody's going to have a different pathway. Rand says, how do you determine optimum exit points? Is there a technical method to identify or confirm reversals? So, exits, I kind of have the same approach with exits as I do with entries. So my whole thing is that, markets end as they do, as they begin. They end with a pattern or something that will tell you that this is, about to, end. And right now, this market is going higher. I don't see anything, any pattern that would suggest that this would turn lower. There are some resistance points right here that it may just, kind of stumble around, but basically I look for so here is this ascending broadening price pattern, and I put a price target on gold. And just to put this into perspective, I'm going to share with you. So this is how you can determine sometimes where something is going to go. So we talked about this ascending broadening price pattern on gold, but you can see that these patterns form on anything. That's why I love looking at the market from price. You can overlay this analysis based on any instrument, and a pattern is a pattern. So here was this ascending broadening price pattern. So remember, we define an ascending broadening as something that goes higher throughout the pattern. It begins life in the pattern narrow and then widens or broadens out at the top. Now, I recognized this was happening very early on. There was also a double top right here. I got short here. And then right here, I also suggested to our members that once this thing breached the lower end around the 195 price level, that this thing was going to go lower. And to my mind, there was no ambiguity about where this is going to go. Ascending broadening price patterns say they will go back to the beginning. And that's exactly what you came down to. And I said, this thing's going to 175 to 178. We came to about 174. And, this is where gold is right now. So gold is at an inflection point. Gold is relatively about here in this ascending broadening. So if we get to here and then start taking this out, then, that's where you can look at where gold's going to go to. I mean, as crazy as that sounds like. But there's also a chance that, you could hit here and go that way. So the NASDAQ did that in March of last year, hit the bottom of an ascending broadening price pattern and went the other way. So I always kind of draw my structure and then I see how the market dances around it. So you can see this massive key reversal that took you underneath this support line, told me that basically this thing was going to head much lower. And so, and now we put ourselves back together again. Here's your double bottom. Here is your inverted head and shoulders. And so this indicates that we're going to go back higher. How high, I don't know, but I suspect a lot higher. So sometimes a pattern will tell us where to look for as a profit objective. No, tomorrow, Galnia, we do not, simul stream on YouTube our underground trading sessions. Those are paid for sessions. And Accenture says, do you use a stop loss in the case of a sudden reversal or news? Yes. And I just look for, where the bars are. So if I'm looking to put a buy stop above this week's high, I'd basically put my sell stop under this low. And so that would be my risk. And that would be what I would look for. So yes, I have risk rewards, and the better your risk reward, meaning the closer you can see where the risk is for a desired outcome. And I always look for at least 3 to 1 on my trade. That means, if I'm looking at an FX trade, I need to see a pathway. So if I get in this thing at 189, I won't get in unless I can see this thing going to 191.5 or 192. I just won't take that trade because, I usually take about 50 to 60 pips as an average thing. And so this is a 3 to 1, where if I win, I make 3 times what I risk. And if you do that successfully, you can actually lose 72% of your trades. So this isn't about how many trades you lose. I think I shared with you yesterday that Peter lost, 19 out of 25 trades, and he's up 30% in 2 months. Ranger says, is the book a hardcover or PDF? It's a PDF. So Brigitte says, I bought the book and I never got it. Is there anyone? So yeah, just contact our support team, support at thepatterntrader.com. I'll also put that in the YouTube too. So I'm sorry if you didn't get it. If something happens, something's in your account, you have some admin thing, please just message our team and they'll help you out. So Brigitte says, how does this work? So you'll get a follow-up email, I imagine, after this webinar, Brigitte. If you don't, contact the support at the Pattern Trader and tell them you want the 200K plan, or you want to be part of the underground, or just talk to somebody who wants to guide you, and we'll figure it out for you. But thank you for asking. Let's see. Grace says, thanks for all the time you take to show us the right way to trade. Appreciate very much for your kindness. So again, if you'd care to share your comments, good or bad, I would also appreciate that. I'm probably sending you too many links here, but if you'd like to share your thoughts with others about your experience, I had a bad experience, tell me why. I had a good, explain both. So, I get feedback. I know if I'm on the right path or not. I'll put this in the YouTube and also in here. So appreciate if you put something in the tip jar. I like to think that I spent 4 days with you and put in a lot of time. So if you could just, tell me one way or another, and I'm not asking you to leave me a great review. What you say is up to you, and everything is on Trustpilot, so that we cannot alter what people say. And you can go and check out other people's reviews if you have any question about, getting on board any of our services. I, suggest that you check out the review page and you can, see for yourself what others are saying. So let's see, we have 147 reviews, and you can go and, just check out what other people have to say. And thank you for those of you who did leave me a review yesterday. Berenger says, how do you consider spread when placing an order at the daily close on the Forex market? So that is a good question, Berenger. There is a close, at 5 p.m. Eastern. The market, the brokers go into, kind of a shutdown for an hour. And during that time, the spreads widen. So my, daily emails usually go out around 4:30 or 5. Don't immediately just put it in. Obviously, wait for things to normalize, wait for the spreads to go back to 2, 3 pips or 5 pips on the bigger pairs. And then I usually just say put a buy stop above the previous day's high or a sell stop below the previous day's low, and just wait for things to even out to do that. But I don't worry about the spread because I'm looking for 150 pips. You have to worry about the spread if you're trading for 15 pips or 7 pips. Then a 3 pip spread or a 2 pip spread starts making a big difference. If I'm trying to make 150 pips, I don't care about the spread. I don't look at the spread. I really don't. And then over time, you also pay these swap fees, which is a so you can see I've incurred these swap fees, which are in addition to commissions. These are charges that you incur for holding a commodity. And so you charge us every 2 days. And so, if you keep, but what I try and do is obviously my profits, you can see I've got $189 in swap fees and $9,900 in profits. So, swap fee is just the cost of doing business in addition to the spread. And like I said, I am looking for the bigger moves that are going to overcome the swap fee and the spread. And that's why most people are losing, because they're getting cut up by taking too small a move. So, to overcome a 2-3 pip spread, you don't realize if you're trading, 5 times a day, times, 2 pips, you're paying, you got 10 pips a day. And then if you're trading, 25 days in the month and you're trading 5 times, you've got 125 trades times, let's say 2 pips, you're paying $2,500 in stealth commissions. So you don't see it. You pay it in the form of the bid and the offer, but you are paying it. And so I prefer, instead of doing 125 trades, to, doing 1 trade and just sitting in it. So whatever my fees, my swap fees and my commissions or whatever, is going to be a lot less than going in and out 5 times a day, trying to steal, 7 pips. So this is all about math and probability. Mohammed says, what platforms are you trading on? Doesn't really matter. Anything that gives you, you can see there's nothing fancy. I could use, a lot of fancy overlays on this. I just need price and time. Any chart service, that gives you this is fine. Do you trade all your assets in the 200K program? Equity, yes. Equities, options, golds, Forex, all in that program. Yes, it's just thank you, Mark, for everything you do for everyone. The value add to our life cannot be quantified. So yes, sir, that is very generous. And if you'd like to post that, exactly that, copy and paste that in the review section, I would really appreciate it. People often ask me, why do I do this? I made, 200 grand in the markets today between my FX and my stock accounts. And, it's comments like that from Yasser, where I give back. So I'm sitting in front of this machine anyways. Whatever I'm doing and analyzing, I'm doing this anyways. So, to get a chance to talk to people and hopefully help others gives me a tremendous amount of gratification, way beyond, I watch money flow in and flow out of my account every day. And, money is great, but it's not everything. So to have kind of a universal audience to speak to and to give back to, and to, people in my underground trading session have been with me 3-5 years. I've seen the same people, same names. And so, I didn't know when I first started the pattern trader, what it would all be all about. But, in the end, I ended up gaining a second family. So it's just been a wonderful experience. And I just, love giving back. I love the markets. Hopefully you see that I have a passion, even after 4 decades. To me, the market is constantly challenging our assumptions, challenging my analysis, challenging the way I see things, throwing us curves. And so it's dynamic. It's, every day is a new day. And, I've never lost my love for it. It's really not about the money. For me, it's like playing well. I was a tennis player, and I used to, if I lost a match and knew I played well, I was fine. On the other hand, I won many matches and knew that I played very average and was really pissed. So it's all about trying to play this game as best as you can. And, hopefully I picked up some wisdom along the way that, I try and share with you. And if you benefit from that, that's fantastic for me. Fidel says, are you still shorting euro yen? So I am still short the euro. I am short. I'm not shorting. I just have my position in. I have my stop loss, and it'll do whatever it's going to do. So let's see. Patty says, thank you, Mark. Your teachings are incredible. Thank you for your help in better understanding the market. So Patty, thank you. I really get, really kind of choked up when people, have a great experience. So thank you. Do you have another pick as good as Upstart? So I told people getting Upstart at 115, 120. My wife's been in it since 135 and hit 295 today. Axel says, love that you share your experience in trading systems. I've looked at many systems, most often look suspicious. I don't get any warning bells from you or how to trade. So look, these have been live, sessions every single day. On Monday, I told you about Beyond Meat. On Tuesday, I told you about Beyond Meat. On Wednesday, and today we hit, a new multi-month low. So, it's hard to see how this could be a suspicion or a scam. I'm telling you what I think in real time, good, bad, or indifferent. Your generosity beyond limits. What you share is worth so much more than you'll charge for it. Thank you so much, Mark. So Axel, thank you. Great comment. Thank you. Son says, I've never had such great sessions before. So that's fantastic, Son. And if you would, like to share that with others, your experience, I would appreciate it. Just go to our link to, leave a review. I'd really appreciate it. Ben says, I appreciate your explanation. So no worries. All right, guys, I think I'm going to love and leave you there. Hopefully you've come away with some input to help you in your trading. Let us know if we can help you with anything else. We have books, we have, different, dedicated programs for gold, for daily things, for the underground. If you want one or all, just let us know. If not, hopefully I will see you somewhere along our respective journeys, and wish you great trading success. Shaitan, thank you. Essentra, I don't know what you mean by satisfaction guarantee. Talk to our team. We always give money back guarantees. If you're not happy, we don't want your money. I make a lot more in trading than I do in my business. And we want you to be happy. And if you're not happy, we'll give you your money back. That's just our policy. We're not going to hold anybody hostage. You should get something out of it. If you don't feel like you got your money's worth, then, we'll definitely accommodate you. All right, Dwight, thanks for hanging out and helping me out. And I will see all of you guys hopefully very soon.
Maybe on Zoom, more likely on Zoom.
All right, Mark. See you later.
All right, thanks.